Okay, what's going on, everybody? Jarrell Coleman here. We're going to be talking about making money with your money today. You probably seen me on Facebook or Instagram by now, sharing pictures, sharing videos, making profits on the Forex market. And a lot of it can sound like a foreign language if you're not familiar with it. It's similar to if I were to go to school to become an electrician, and then I start talking about my work day as an electrician. You're not going to understand what I'm talking about without going to get that same knowledge. And you are going to need to do some school to learn how to do this. I can definitely teach you how to become a Forex trader, but this is just your introduction. Because 100% of the people in the US anyway, a lot of people overseas are already hip to the Forex market, but everybody I introduced this to in the US, they've never heard of it before, don't have any idea what it is, how it works. So I decided to put this PowerPoint together for you guys. And only reason I'm not going to do a slideshow is because I want to be able to switch back and forth between the charts and reference to a few things during the presentation. But this is your introduction to the foreign exchange, aka Forex market. So what is the Forex market? Like I just said, it's the foreign exchange. It's actually the largest financial market in the world. So it's much bigger than the US stock exchange, much bigger than any other market there is. This is all the money in the world all together. So major currencies, US dollar, euro in Europe, Japanese yen, Great Britain pound, Swiss franc, Canadian dollar, Australian dollar, New Zealand dollar. All of these currencies had to be matched up against one another because, say, for instance, if I were to travel to Europe today, I'm going to have to convert all my American dollars to euros to be able to shop over there. So right now, right this second, as a matter of fact, for every $1.23 I have in my pocket, I'll get €1. And 15 seconds from now, that could be $1.24. Just that one penny is an opportunity to make a lot of money. And we're going to talk about that. But what actually happened, if you look back in history, because this is nothing new, this is not a trend. This has been around since 1971. At the end of World War II, they implemented what was called the Bretton Woods system, which just meant that every currency in the world was directly correlated to gold, and all gold translated to the US dollar. So it was almost like all currencies revolved around the US dollar. In 1971, President Nixon got rid of the Bretton Woods system and made all currencies a free floating system, which pretty much just means all of the currency values go up and down all day, and it's all decided by supply and demand that's going on around the world. So that's what you're looking at here, over here in this left column, where you see USD CHF, that's the US dollar versus the Swiss franc, GBP USD, that's the Great Britain pound versus the US dollar. You see these numbers moving by the second. So the prices are always fluctuating. And by learning how to be at the right place at the right time, whether it's from your laptop or your cell phone, you probably see me trading from my phone a lot. You can monitor the price movement by looking at the charts, which is called technical analysis, or you can monitor the news, which is called fundamental analysis. But back to the PowerPoint. Oh yeah, the market's open 24 hours a day, Monday through Friday. So it closes Friday at 5 p.m. Eastern Standard Time, opens back up Sunday, 5 p.m. Eastern Standard Time. So I can literally make trades all day, all night, work whatever kind of hours I want to work to make a trading schedule. So here you can see on the chart, The Forex market does about $5.3 trillion in daily volume. There is nothing else in the trillions. There's nothing else that even does $1 trillion a day. So we have futures here, 437 billion a day, equities 199 billion a day. The New York Stock Exchange altogether, I'm gonna say only $28 billion is still a lot of money, but it only does 28 billion a day compared to Forex doing 5.3 trillion. So there's just a lot more money to be made over here. And it baffles me why we aren't hip to it or why nobody knows about it, which is why I started educating people, because we need people to teach us this stuff. So why trade Forex? Number one is the leverage. So you can use much more leverage than you could with a stock for exchange, where your dollar is going to get you $1 worth of stock. On the Forex, foreign exchange market, that same dollar might get you $100 worth of buying power, and that's called leverage. So a small deposit can control a much larger contract value. 50-to-1 leverage means that $50 would allow you to buy or sell $2,500 worth of currency, and on up as you increase that leverage. My leverage is actually 1 to 1,000. So I can leverage much more than that with $50. And that's why you can see me take a $100 or $200 account and grow it by $600 in one day if I'm making smart moves and really focusing on the price movement. It's all because of the leverage. So reason number two why you want to get involved on the Forex market are the low barriers to entry. It can be very expensive to get started on the stock market. They're finding more ways to make it easier and appeal to the retail market, like the E-Trade app and things of that nature, where you don't have to have a large initial deposit and you can get started. The Robinhood app, but they won't teach you this, and that leverage is probably the main reason why. So you can start a Forex account with as little as $50. Some brokers even allow you to get started with as little as $10. Broker I recommend is actually a $50 entry fee. But that's all your money. There's no fees involved with that. You put that in and then you start trading with it. And then also you can practice for free with what's called a demo account. You go live when you're ready to start trading with your real money. So how do you make money on the Forex market? You make money by what I like to call price units, but they're literally called pips, P-I-P. So if you ever see somebody with a shirt on that says got pips, this is what they're talking about. You probably walk right past a day trader. So a 30 pip increase, if I'm trading at $1 per pip, would be a $30 gain. Let me show you what that looks like on the chart. So I actually have GBP, JPY up here. It's a little easier to recognize the Euro USD pair because it looks just like the American dollar. We got $1.23 and then 72/10 of a cent. But here, with any JPY pair, we're going to have 3 numbers on the left of the decimal and 3 on the right, because the Japanese yen is just different. So for every 152.78 cents, if that's what you call it, a Japanese yen that I have, I would get £1 from Great Britain. So right now you can see this line, the price is fluctuating. What you'll get that £1 for, 152.775. These first 2 numbers after the decimal give you your price unit or your pip. So that's the number you should be watching at 78 now. If this price went up from 152.77 all the way up to 153.07, that would be a 30 pip increase. And that's a little bit off the chart here because I'm on the 1 minute chart. But if you come over here, you can see Let me put this on the 15. Put it on the M30. There we go. All right, so if it went from here to about here, where my mouse cursor is, or where you see this triangle, that would be $30 for me trading $1 per pip. Now, that same trade at $10 per pip, of course, would be $300 gain when you can afford to compound your money at a higher level. A 50 pip increase at $10 would be a $500 gain. 25 pip decrease on a sell at $5 per pip is a $125 gain. So that's the next thing, is compared to on the stock market where you buy something and it needs to appreciate for you to make money. Here on the Forex market, you just need to know if it's going up or down. If it's going up, you're going to select this buy, because when it goes up, you make money on a buy. But if you think it's about to go down, like these green bars are increases, the red bars are decreases. So say here, you knew the price was going to decrease, not go up, but go down. That would just mean you would execute a sell order rather than a buy order. Either way, you're buying a position. But if you sell and it goes down, you're making money. So just keep that in mind. That's why it says a decrease on the sell, profit, increase on the buy is profit. So how do I protect my money? This is probably the most important thing that you need to learn, and it's probably the #1 ignored topic for a new trader. I mean, you get excited, you get in, you make a little money, you want to make more, you let your emotions take over, and you forget about what's called risk management, and the next day now you've lost everything you made the day before. So this is how you protect your money when you're day trading on the Forex market. Whether you're doing short-term trades or long-term trades, you want to have a risk management principle. So as a beginner, you should never risk more than 2 to 5% of your account at a time. So let me tell you how I would do that. Ignore this number down here. Let's just say for easy math, I've got $100 in my trading account. I want to start with 100. So if I'm going to use 5%, that means I never want to risk more than $5 at a time while I'm trading. And when I say at a time, I mean per session. How many trades do you have open at one time? You always want to close the trades you have open before you start a new session as far as risk management is concerned. So if I'm only going to risk $5 at a time, I already know right off the back I can't afford to trade $1 per pip, because I can only afford 5 price units in the wrong direction before I've lost that trade. So I'm gonna try. Oh yeah, I got quick trades on. No, there's a new order screen. Let me move it over here. Okay. So where I can risk $5, more than likely I will want to trade with only $100. You're going to start off trading 10 cents per price unit, or 10 cents per pip. So at 10 cents per pip, which would be a 0.01 volume lot size most of the time, you'll also have to calculate that per pair. But Euro USD, this would be 10 cents per pip, which means I can afford to, if I can afford to risk $5 and I'm going to risk it all on this trade, I could risk 500 price units, which typically you would never do. But for math's sake, I would set this stop loss at 500 units at 10 cents per pip, because 500 times 0.01 is 5. Or I could say I'm going to do 50 cents per pip because I want to be able to compound my money a little faster than at 10 cents per pip. So now instead of being able to risk 500 price units, I can risk 100 price units on that one trade. Or I could open up 2 positions and risk 50 price units each. So, I mean, it's all math. And that's probably why a lot of people stray away from it, because they don't feel like doing the math. But when you do it over and over again, eventually you know it like the back of your hand. You do these calculations in your head. You don't need a calculator, especially when you stick with whole numbers for calculating. So if once I jump to 200, I basically just know I can do twice what I was doing before. So if I was doing 50 cents per pip and now I have $200, I can jump up to $1 per pip, and I'm not even increasing my risk. So this column right here called the stop loss, this is how you control how much money you lose on any trade. So you should never lose more than what you're willing to lose at any point in time. There's no reason to lose all your money unless you're just losing every single trade. Of course, you're going to lose it all incrementally. But if you're increasing your knowledge and you're educating yourself properly like you should be and learning from your mistakes along the way, you're going to win some of these trades. But if I only want to risk $1 per trade, I can do that. So now it's almost like buying a scratch ticket. I pay $1 for this position. Worst case scenario, I lose $1 on this trade, but best case scenario, I might make 10. But instead of it being based on if I hit the number, it's based on if I calculate the price movement correctly. So back to this PowerPoint. I feel like I'm taking too much time. So this is accomplished by using your lot size and your stop loss. I basically just explained that using this order screen, you're going to change your lot size in order to control the value per price unit, and then use your stop loss to cut it off. Use your take profit to automatically get those profits for you. It's going to close out as soon as it hits that mark. So how can I get started as a Forex trader? Number one thing you had to do is open a broker account. And I haven't been able to find one in the US yet. I don't think there are any US Forex brokers. They're mostly overseas. So in order to get your money, you will have to have it wired to you internationally. But you open a broker account that allows you to make trades, no fees or middleman. They're compensated by what's called the spread. So the spread is the difference between these two numbers that you're going to see right here and right here. The blue line and the red line just represent the ask and the bid. And the difference between that is where the broker makes their money every time you make a trade. So you're going to have to overcome that to jump into profit. For example, if I jump into this trade at 1.2376, and the spread is, right now it's about 2 pips. So it just means I have to, the price action would have to go in the direction I thought it was for 2 or 3 units prior to me breaking even. And then after everything after that would be profit. So once you have your broker account set up, and personally, I recommend LMFX, 1, because they have great spreads, but 2, because I can call them at any point in time during the day, 24 hours. As long as the market is open, they're open. And when you talk about customer service,
LMFX customer support, this is Leo, how can I help?
thank you, I appreciate it. I mean, they don't even let the phone ring before they answer. Every time I call since I opened my account, it's crazy. They literally have the best customer service in the world. So get your get your questions answered right by phone. Once you get your account set up, you're gonna download an app called MetaTrader 4, either to your phone, tablet, or you download the software right on your computer, which is what you see here. Now, if you're using LMFX with the computer software, make sure you download the specific LMFX MetaTrader 4 software. Or you can just contact me and I'll walk you through everything, because I know it's kind of a long process. But once you have your MetaTrader 4 app set up, you log into it with your broker account, whether it's demo or live, now you're ready to make trades. Next thing you need to do is invest into your education, because if you want to make money on a consistent basis and not have it be luck, you definitely need some strategies, a trade schedule. You need some education. It's going to take you a while to learn the basics. Then you move on to the advanced learning, tools, trading software, things of that nature. A lot of people aren't going to have time to learn all of this stuff. I know that. A lot of people don't want to put the time and effort in it's going to take to learn this. I know that. There are programs out there that you can take advantage of if you want to be involved and make some money, but you don't necessarily have the time to put into it. I recommend a great online academy called Our Markets Live. It doesn't just come with education, because you can actually learn all of this all in one place. And contact me if you want some information on this as well. But they have tools that will literally tell you what to trade. So I'm just gonna pull this web analyzer over here for a quick second. I'm gonna refresh this. It'll make me log in again. Only reason I'm gonna show you this real quick is I want you to see how simple they make it. So don't worry about all that over there. Just look at this column on the right. 6 minutes ago, they called a buy on Euro USD, called it at 1.2375. So if you were to come here and look at this, all you need to know is they called a buy and what time it was called. If you go back on this chart a few minutes, you can see that the price has been going up since they called the buy. I mean, this tool is very accurate. It takes a lot of things into consideration. I use it as a supplement to earn extra money on, because there's so many pairs, you're not going to have time to analyze all of these pairs. I only analyze one. There's so much to learn. I only have time to analyze one. So if you have time to analyze 70 different pairs, that's great. If you don't, you can use software that will help you earn some profit even while you're still learning. So with the swipe trades, for instance, you would just get notifications to your phone, and you can actually copy and paste those into the data, into the MetaTrader 4, and make money. So how much can I make? I mean, that's all up to you. How much are you going to start with? What kind of risk management principle are you going to use? How aggressive are you going to be? How conservative are you going to be? My best day on the Forex market so far was $643. I did that probably in about 4 or 5 hours, in between 12 midnight and 4 a.m. And then I woke up around 8, made a couple more trades. I was done for the day. And that's typically my trading day. I'll trade at night because I like to trade on the Asian session. There are times all around the clock that you can trade and make money. So whatever works best for you. Worst day was 391, probably trying to be a little too aggressive. I normally won't risk more than 5% of my balance. And then I was definitely still in the early education stages. So when you make money early in your trading career, you actually want to be more careful versus more aggressive, because there are a lot of opportunities to make mistakes. And then on a daily average, anywhere between 50 and 125 in profit. My daily target is $100. So I like to trade at $1 per price unit. My daily goal is 100 units per day, or 100 pips per day at that dollar, which is really not that hard to achieve. I can normally do it in 2 or 3 hours. So hopefully this sparks some interest in you guys. Hopefully you want to know more about what Forex is. Feel free to reach out to me. I have tons of resources and material that I created myself and more that I can plug you into. Apps, trading software, market, trend analyzers, strength analyzers, fundamental analysis, getting notifications when the news comes in, know how it's going to affect the price movement. So it's almost like you get insider trade information, but everything that's related to Forex. They said just got a new notification for a trade I might need to take. 1 second. So you see that literally just came in seconds ago, 0.3 minutes. A sell on Euro CAD. And you see it's going down, but they probably call it because it bounced off of this top Bollinger Band. And that's just some advanced stuff you'll learn later on. So next time, we're going to be talking about when to buy, when to sell. For those of you that are still interested, I'm going to continue to do these webinars. Eventually, hopefully, even start going live so you guys can see some of the trades I'm doing in real time. But we're going to be talking about fundamental analysis versus technical analysis. So stay tuned. If this looks like something you want to get involved with, contact me today. You can reach me in my Facebook message. It's facebook.com/JarrellColeman13. Find my Facebook profile. On my YouTube channel is ColemanTrading.com. I got about 28 training videos posted up there. I'm happy to train people, happy to lead people in the right direction, happy to answer questions. Whatever you guys need so we can take over some of this market. Hope y'all have a good, profitable day. And good luck to all the day traders out there.